Good morning from Los Angeles. Good morning. Welcome to Trading with Sergio Monday edition. I'm feeling better. I think I'm over my cold. Welcome. Well, Washington is back to work after 40 days. Did you guys miss him? Did you guys miss your senators and representatives? Did the country kind of function? Although a lot of folks didn't get paid, but the senators did. And the House of Representatives did. They got their paychecks. How you guys like my green hat? So I'm gonna do this on when I'm doing the live because things can change, of course. But if we're green, I'm wearing a green hat. If we're red, I'm wearing the red hat. That's what we're gonna do from now on. Yay! Yeah, I found one. I found one from the archives, Doug. It's actually it's a global rideshare company called InDrive, established in the coldest place on the planet, Yakutsk, Yakutsk, yeah, fuck, Yakutsk in Russia. It is the coldest place on the planet, and it was founded by a gentleman from Yakutsk, and it's about a 4 billion market cap company. They were in the U.S. I was working with them. We had launched Miami, Tampa. We were about to launch New York, and they said no, no thanks. But it's their hat called InDrive. I think it's the second most downloaded app in the globe. If you guys do visit other countries, please go check it out. Instead of using Uber and Lyft, you can use InDrive, and because their drivers make more money and you pay less. But they couldn't survive the competition in the U.S. But I did find their hat. So that's what I'm going to do. I'm going to wear a green hat for green days, red hat for red days. Oh, if we get an unchanged day, I wear my black hat. I got the hats covered now for at least this year. I may actually get hats done, to be honest with you. It's no big deal. I'll get a green hat done with an arrow up, like in the middle right here. And then red hat with an arrow down. Yeah, I think that's a good idea. So, uh, anyway, good morning. Good morning, good morning, good morning. Government's back to work, folks. No fear. They're ready to spend the money. And the market reacted positively, as most of us would have guessed, but there are other things going on that I'll talk a little bit about today. One of the more important things actually that's happening is in the repo markets. If you don't understand the technicalities, go Gemini it, Grok it, Google it, whatever you want to do it. There's overnight repo markets that's called overnight banks lending to each other. That was frozen up until probably yesterday as well, and the rates were shooting up, meaning banks are not willing to deal with each other even on an overnight basis to lend to each other, and the rates went up to like 4.5, 4.7%. So for the past month, this has been going on. That's why all the regional banks are their stocks are eating it. Look, there is definitely stuff happening under the surface that not too many people are paying attention to. I am paying attention to it, obviously. I mean, you can't trade off of it yet, not yet, but it could add to the volatility going forward. But the Fed had been coming in every day, pretty much 20, 30, 40, $50 billion injecting funds to stabilize that marketplace, because if the banks don't lend to each other, there is a reason for it. It's because liquidity is number one low. Number two, they don't trust each other, right? And that's why they're asking these exorbitant rates. It's called SOFR rates. And so you guys need to start educating yourself about that. The other thing is, on my watch list, again, 5 stocks basically are taking this move up on the index. A lot of reds involved already. The advanced decline line is really not that great, has not been that great. So what's pushing it up today? NVIDIA, obviously, Palantir, maybe a little bit of the couple of the Mag 7s like Apple and Amazon. Meta's taking a little bounce. A couple of stocks. I mean, 5-8 stocks are pushing the indexes up, and some small caps which were absolutely smashed are popping as well. On the other hand, the Democrats could not get what they wanted, which was the ACA credits, Obamacare, basically. The Republicans said, no, let's kick that can down the road, and we'll talk about it in December. We'll vote on it in December, so you guys are going to wait for that. So all the Oscar Health lovers on X who have put everything they have into Oscar Health, they're eating a little bit today. Stock's down to about 15. I'm actually looking to buy it maybe 12, 13 range if it gets down there. So that's one. I cleaned up some stuff today, break even, a little bit of profits. And so, yeah, I mean, we're up. I'm not going to talk about the weekly economic calendar because we're going to start getting numbers now that BLS is back to work, Bureau of Labor Statistics. Not that their numbers are any good, honestly, because the numbers that we're going to see is probably from the past. It may not be showing the true colors of the economy, but look, folks, the economy is not healthy, okay? You all can go do this. I don't have to tell you this. You can go to Federal Reserve Economic Data, and check out the default rates on prime and subprime auto loans. Check out the default rates in credit card loans or credit cards. Go check it out. It's public information. They are at some disturbing levels. They're back to almost a couple of the numbers are back to 2008 levels. Add to that, in fact, I don't recommend other podcasts on this channel, but I do watch the All In podcast with the tech bros, Chamath and JCal and obviously David Sachs, who's our crypto czar for the Trump administration. They do have a decent podcast. 2 weeks ago, they had Elon Musk, but this past week was probably one of the better ones. And they were talking about socialists taking over in New York City. New York City voted in overwhelming numbers for Zoran Mamdani, who talked a big game when it comes to being a mayor of New York, of the most wonderful city on the planet, the finance center of the globe, basically. And he won by a wide margin. And so why is that? Because young people, let's say the millennials, starting with the millennials down, are unhappy about folks like me, the baby boomers, who have all the wealth in the country. That's because we saw the light at the end of the tunnel. We said we need to invest in hard assets, and we did. Let it be real estate, or let it be stocks, or whatever not. The unemployment rate in the recent college graduate cohort is double, almost 10%. None of them can afford a home. They're all living in their mother's basements, and they voted in big numbers for a socialist. There is this possible movement that could happen in this country. Look, I'm a capitalist, okay, but I'm fair. I'm a fair capitalist. I'm not a brutal vulture capitalist, okay? If you were to ask me, would I have socialism over capitalism? Hell no. Although, in a much smaller scale, there are some successful countries around the globe that run socialism properly. Unlike Cuba, unlike Venezuela, but then there are some countries in the Scandinavian countries like Norway, Sweden, they're doing fine. There are some huge, massive companies in Sweden and Norway. Norway has probably one of the largest sovereign wealth funds because they have oil and gas. So what I'm trying to say is we have to be careful here now. So New York City, not state, New York City voted for this socialist who says housing is going to be free, transportation is going to be free, it's all going to be free. You can't be a billionaire. You can't make any money. If you make any money, we're going to take your money. I'm like, no. Let's not fix anything that ain't broken. Although, during that podcast, the reason I brought that up, They talked about it, and they all agreed on one thing: that the youth of this country is disillusionized. I mean, they are depressed because they're getting out of college, they can't get a job. Although a couple of them said, which also agree with that, such as Chomat and David Sachs, said maybe they should not have studied what they studied and came out with $300,000 college loans on some garbage that's not going to make them a living. I kind of agree with that. I've been saying that for a long, long time here. But it was a good podcast. I enjoyed it, and I would highly recommend you guys go watch it, especially the last third of it. So the youth and the millennials voted in big numbers for this guy. Now we have midterms coming up, and one thing also I agree with that podcast that they were talking about is Trump's mandate was on the working class, right? He got a mandate. He got the House. He got the legislative branch. He got the executive branch. He got the Senate. He's got the White House. Government's back to work. We need to do some work for the average American. Average American is getting crushed. They're getting crushed under inflation. Inflation did not go anywhere. They couldn't put it back in the box. Now that they're cutting rates, all asset classes probably take off again. And these people feel left behind, and I don't blame them. I absolutely don't blame them. But the Trump won the election because he promised a lot of things for the average American, not the billionaire bunch in New York City or in Florida. So President Trump and the administration now has to pay attention and deliver on those promises because we have midterms coming up next year. This socialist movement that started in New York City could spread, and the Democrats will definitely tag along with that idea that you shouldn't be making money, you should not be wealthy, you should share the wealth. I'm like, no, I worked hard for it. However, I do agree with one thing. The average American is getting crushed, okay? The wealth gap is as wide as it's ever been. In fact, I have my segue to my website, www.sergioavedian.com. Please go subscribe to the free. It's free. I'm not selling you anything. Free newsletter. At noon today, you're going to get the fourth edition of the free newsletter, and it will be talking about the wealth gap in the country. Again, I'm a full-on capitalist, but fair one. The wealth gap in the country is as wide as it's ever been because there's a reason for that. The reason for that is I'm not going to say I'm in the top 1%. I'm in the top 10% of the country. We figured out what the government's doing, and the top 1% for sure has figured out, because the statistics prove it. Top 10% own 87% of the assets in this country. So that means the rest of it is suffering. It's getting crushed. They're collecting their W-2, and inflation is high. Cost of living is going up. The dollar is losing its value. They're losing their buying power, and they're not able to catch up, let alone do the monthly expenses. They cannot invest. So what happens is that wealth gap keeps getting wider and wider because people who hold the assets, well, the assets, they don't have to add to their assets. Their assets already are going up double, triple over the last 10 years. Well, the people who don't have it, they can hardly put food on the table. What assets, right? I mean, but then that's why I started the website. That's why I started the channel, because there is only one way to close this wealth gap. Okay? The average American has to learn how to invest. They have to invest, because if you don't invest, you're going to for sure get left behind. And whatever it is that you can do a monthly budget. I guarantee you, folks, you will find a lot of frivolous spending in your budget. Take that money, and I'm not telling you to cut down on your single vacation a year. I'm not telling you, but maybe Starbucks, maybe junk food you eat every day, maybe you order DoorDash, all these things. You can reduce these and then start putting the money into some investment account long term, okay? Because financial literacy in this country is horseshit. I think we don't teach it on purpose. We don't, because we just want a dependent society, and then people like Mamdani go get elected mayor of New York City. Now, Will he be able to do all the things that he promised? No, because there's obviously, city council, and he's going to get some pushback. But there is a possibility that the country could go from this way. The pendulum can swing widely in this country, right? But my advice to the Trump administration is you got voted in by the young white males. You got a lot of votes from the Hispanic crowd. You got a lot of votes from the black crowd. You got African Americans. You got a lot of votes that Republicans are not used to getting because they trusted Trump that he is the average man's president. So far, that has not been delivered. And they better pay attention to that, because if they lose the midterm elections, because look, there was an election that took place. It was in the blue states, granted. A lot of governors who won the races were Democrats. It's no panicking yet, but in the midterms, if Trump loses the House, which is unlikely, but it could happen. There's a long way to go to that. He's going to be a deadlock president. So my point in all of this is, going back to that podcast, we need to take care of the average American in this country. And they voted in big numbers for Donald Trump. And now he has to deliver. He has to stop meddling around with this tariff musical chairs. He has to stop meddling around with all this other bullshit. He needs to pay attention to the people who voted for him. Otherwise, there will be other Mamdanis that pop up. And look, they're all politicians, right? I don't trust politicians as far as I can throw them. But yeah, people are, upset in this country that the rich have everything and then the poor don't have anything. Well, learn how to invest, folks. Get the financial literacy going in this country. And that's going to be my goal, right? Whatever I can do through my website and through my channel. And if you guys support me, I think it'll be great. Financial literacy is a must, starting from elementary school all the way to college. Because there is no reason a college kid should come out of college with a bowl and shackles to his feet. It shouldn't be that way. That $200,000-$300,000 student loan, and then they talked about student loan reform. I agree with that too. I think we need to do that. I don't think we should give these loans to anybody that wants a loan that's going to go study some garbage, major. And if you are, I don't think you should be getting a student loan, because the amount of the student loan should be something that you can pay back. Okay. And if you're going to go study, music history, or if you're going to go study anthropology, or look, I'm not diminishing any of those majors, but the potential income source from those majors, if you can land a job somewhere within the age of AI, it's going to be difficult. So can you pay that back? And then why should you be burdened with $200,000-$300,000 student loans that you're going to pay for the rest of your life? It shouldn't be like that. So I did agree with a lot of the podcasts. Usually I don't agree with much on that podcast, but on this one it was a really, really cool podcast. So anyway, good morning, everyone. All right, let's answer some of the calls. We'll go to the positions. Oh, you guys want to join the live stream with my new green hat? Man, feeling better is a good thing. I was feeling like shit on Friday. But then 10,000 milligrams of vitamin C daily, hot tea. There's a Greek remedy for a cold, by the way. So hot tea, any kind of tea, with a teaspoon. You put some honey in there, you squeeze some lemon on it, you take it, wash it down with hot tea. And it's one of the best remedies. And also Vietnamese pho. I love pho. So if you go have some soup, hot soup, load that up with some hot sauce, get all those sinuses working out. It's all good. I think I feel better. All right. Good morning, SJ. Good morning, Doug. Good morning. Mike D, hello. Good morning, Manny P. Any naked strangles on like TJ? What does that mean? Do I like any? I don't have any. I have put credit spreads. I don't have naked strangles. Not a huge fan of naked strangles when the market's getting really volatile because you will get whipsawed. Your puts will get in the money, you'll panic and roll the puts down, and then they'll bounce, jackknife you, and then your calls will be in trouble. So naked strangles are require a lot of attention and a lot of brevity. Oh, Barev says, "Are you Armenian, bro, or you're just making that shit up?" Luis, good morning. Good morning, John. Okay, these are my Armenian brothers. Parlus. Parlus in Armenian means good morning. Because I'm starting to see deals on leases. Yeah. Oh, leases, car leases? Yeah, I don't know. There's always good deals. The best deal is the one that my wife got 4 months ago. She went and got a Chevy Equinox, full EV, 300-mile range, fast charging, fully loaded, 0 down, 3-year lease, 12,000 miles a year for $230, including tax. Go get one of those, bro. They're still available, I think. It's amazing. I wish I hadn't gotten my car. I would have gotten that one. I mean, I'm not going to say it's as good as a Tesla Model Y, obviously not. But I mean, for $240, you can even go out to dinner and eat sushi for 2 people for $240 a month. And the insurance is reasonable. So, yeah. Well, car market's in the toilets. I want to short Carvana the worst possible way. Because CarMax is, if you look at CarMax stock, it's eating it. Why is Carvana holding up here? You guys know Carvana, right? It was like $5. I was long the stock. I was long from 10 to 80, and then it went up another 5x. But now it's like 300 plus. I'm going like, that's a joke, right? And so why are we doing this? But then, it's hanging in there, man. Hanging in there. Increase the contribution rate. Yeah, I mean, look, 401k, hopefully you keep pace with inflation in your 401k. Yeah, I mean, if you probably can do better if you didn't have restrictions, because most 401k most that I know of have some restrictions in what you can invest in. But I'm pretty sure they let you do it for an index or a high dividend income index or something. Then you should be all right. Okay, John is on a roll. I have a Roth IRA as well. Yeah, we need to educate people. I mean, financial literacy is in the toilet. We teach our kids everything. We teach our kids about sex education, which we should, okay? Teach them about all kinds of things. I don't want to get into the specifics, but then why don't we teach them about budgets, simple things? I mean, we're not talking high finance here, okay? Why don't we teach them about debt management? Why don't we teach them about plastic crack, how devastating it could be for their future? Why don't we teach them about, all these things? Why don't we just have a counselor talk to them about the student loans when they're getting that student loan? Because with the underwriting is so simple. They go, yeah, I need 10 grand, 20 grand, 50 grand. They give it to them. They don't ask him, like, what are you studying, buddy? Like, can you make this money back when you quit college? Because college is not what it's supposed to be. My time, college was important. Today, it's bullshit. It's not important. It's garbage. Especially if you're studying some garbage, major. Go to the trade school. You're gonna make so much more money. Even Elon's agreed with that on Joe Rogan. He goes, go to trade school, he said, because AI is gonna do every fucking job that you're gonna do that you're gonna learn in college. So no, it's lime, bro. It's not yellowish green. It's lime. Check your eyes. Okay, I will get a proper green. Well, I have a good red, but I will get a couple of hats made. A red one. Should I get a yellow one though? It's a red, yellow, and green, like the traffic signals. I should get one of each. Like warning, I don't know. I'll figure it out. Yeah, I use their tissues. That is an insanely good deal. I'm telling you, I love the car. I wish I hadn't bought my car. I would have we would have all bought the same car. They literally were like, she was at Costco. There's a Chevy dealer near us, and there was a representative. And he was like, are you interested in the market? And then my wife listens, I guess, to these things. I would have just walked right by. Good thing she listened. And She calls me up. She goes, I'm in the middle of doing stuff. Like, I'm in the middle, I'm busy. You got something going? And goes, like, should we buy this car? I go, we have enough cars. We have a lot of cars. She goes, no, but this is like ridiculous. I go, like, okay, well, what is it? So she told me the deal. Fully loaded Chevy Equinox. Big car, by the way. Okay. Solid. 300-mile range. No down. 240. I go, he's putting you on. There's a catch. It's like a $45,000 car. And then I said, well, what's the residual? So she said the residual is like 34,000. I'm like, oh, that's what they're doing. They're trying to get rid of them. I go, sign it right then and there. Don't even walk out. Just sign it. We'll go pick up the car today. And we did. It's absolutely amazing car. Absolutely amazing car. Yeah, go look at it. It's 300-mile range, bro. I mean, 300 with the, it's usually says 320, but it's, let's say 280, 300. I mean, go to a Chevy dealer. I'm sure they have it. And they have some probably good deals on these other EVs because the 7,500 tax credit went out. Oh, FYI, when she got it, the 7,500 tax credit was available. So you're losing that, so the deals may not be there. You know what I mean? The deals may not be there. Okay, John. It's like, why don't you grab the link and come on? We can talk about it. Oh, yeah, my channel is growing. I broke like 3,000 subs. You know, I'm not doing it for YouTube. Anyway, so what's going on? Market's still green. Is it green? Let's go to the positions. Again, here's the link. If you guys want to join, please join. Here's the copy. I had a guest, TJ, last Friday. Here's the link if you guys want to join. Anybody can grab it and come on. Oh, I'm asking you're in a quiet place with decent internet reception so we don't get busted up. All right, so what are we doing? Market's moving higher. I cleaned up one position. You know, when you're going a hole on a, you know, from a veteran trader to you, when you go on a hole and the market comes back and saves your ass, you clean that shit up. And break evens are the best trades you can make, honestly, because you know how to make money anyway. All right, so let's see where we are. All right. Actually, before I came on, things were better. I should go back out. All right, so let's do this. Only 1, 2, 3, 4, 5, 6 positions. I'm looking to add some. I'm like 70% cash, so we'll see. First position, I'm long 500 leaps of ASST Strive Inc. They actually floated a pretty successful preferred and bought 1,567 more Bitcoin. They're also in the process of acquiring Semler Scientific, which holds about 5,600 Bitcoin. So I think overall they're up to, with today's purchase or this weekend's purchase, I think they're up to about 12,500 Bitcoin. Look, this is a pure DAT play. They do have, you know, both Strive Inc., which is Vivek Ramaswamy's company, or he's involved with it anyway. It's become a DAT, digital asset treasury company, right? But they do have both companies, Semler Scientific and Strive, because it was Kindly MD. They had some sort of medical equipment or medical testing equipment companies, so they may have some free cash flow that can throw away with that business. Second position is Beyond Meat. I've been long these puts for like a month now. When the stock was moving up, or 3 weeks actually, when the stock was moving up, I had bought 300 of the November 21 expiration $1 puts. Well, data decay came into play. So what do I do when data decay comes into play? Then I turn them into weekly put credit spreads, taking all the money out, turning a negative situation into a positive situation. So but then the position gets trimmed every time the long side gets to even, you trim it, and then, you know, the puts pay for whatever you paid and then create profits for you. You have to maneuver these things, guys. I don't know if you don't understand it. I've explained it before. So at the moment, I'm long 100 Beyond Meat November 21 expiration puts, $1 puts. But against it, I went and sold 50 of the weekly this Friday expiration 1 puts and 50 of the 1.5 puts. I sold the 1.5 puts at 40, they're 30. I sold the 1 puts at 5, they're 4.5 or 4, whatever. So this time I decided if the stock is below 150, I'm going to take the 5,000 shares, get assigned, and be done with that. But then overall, negative situation turned into a positive situation, because if you're doing directional, data decay or time decay is going to be your enemy. So you need to know how to manage that. So next position, Fathom Holdings. They're the largest real estate brokerage, mortgage broker, and title search company in the Carolinas. I'm long 16,000 shares. Average cost 160. Stock's 127. Earnings are tomorrow. We'll see where you go. Excuse me, still a little cough going on here and there. Okay, I added to this position on Friday, actually. Navitas Semiconductor. Stock was 17, pulled down to 8.5. They did a secondary. And what a management. Stock is 18, you don't do a secondary, but then you do a private placement at 675 when the stock is 8. I'm like, what's happening? Long story short, I was short put credit spreads going out to December. I was not credit spreads. I was short the 7 puts. And those got cut in half. Of course, stock moved up. I bought those back. And I was long 50 of the 10-15 call debit spreads. Those were underwater on Friday. I added a little bit on Friday, and today I got out with my ass together. Probably made a few shekels out of it. So these are the types of positions that I'm talking about. So this position probably was underwater by about 2-3 grand. And today, that 2-3 grand is found money for you. And you need to close, you need to trim, you need to... Could it go more profitable? Yeah, it could. But, you know, I'm trying to clean things up. This was last week before Open Door earnings came out. Some of my members said, you know, let's go buy some Open Door calls. I go, okay, for the earnings, and earnings were not good, obviously. And but luckily, I bought this Friday's. There's a lot of ticket. I'm long 75 of the 10 calls. I think they got as high as 99 cents today. I'm like, I probably should have sold it, but then it was a lot of ticket. I'm willing to let them expire worthless. So that's that. Here's the bigger position on SPET. I was long shares. Those are gone. Give me a minute. All right. Getting a ticklish throat. Cold, I guess, still hanging around. Anyway, short 80 put credit spreads going out to January 2026. Short 15 puts, long 12.5 puts. Stock is 1230. So we're not at max loss, but we know what's going on with Ethereum. We know what's going on with BMNR. We know what's going on with MSTR. I'll talk a little bit about that, actually. That the people on X have turned against Michael Saylor now. They expected MNAV to hold at 2.2. I'm like, no. So I follow MNAV. SBET is probably the best managed that meaning digital asset treasury company that's fully staking their ETH. That's the only one I know. That's selling at 0.84 MNAV. So I'm going like, okay, I'll buy it. And that's the trade I put on. Even when I put it on, stock was 14.5. Now we're at 1230. Even with defined downside risk trade, I'm eating it, right? So, but then I know my max loss is 2.5. 15 minus 12.5 is 2.5, and I took in $1.60 when I did the trade. So my max loss is 2.5. But since I took in $1.60 credit, you know, I can only lose 90 cents. Even with that, I'm losing money on this position. And with that credit, I turned around and bought 115 of the January expiration again, 15 calls. These are just directional. It was a call debit spread. Obviously, stock went down. Bought the short side back. Now we'll see what happens with the long side. And last but not least, I am short 45, put credit spread on Solana, 2x ETF, SOLT is the symbol. This is a 1210 put credit spread, put on at $1 credit. So hopefully by November 21st, we will be collecting all that juice out of this position as long as it stays above 12, right? So if it's below 12, I'm willing to take assignment of 4,500 shares of SOLT at 11. And that's what's going to turn out to be. I also have a call debit spread, 20s, 22, 20, long 20s, short 21s, and 22s. No, short 22s and 23s. So, a little juiced on the upside. We'll see. We'll see where the positions are going to end. I'm about 70% cash. I'm looking at Oscar. I would actually like to buy some of that, but like NVTS, right? I got out this morning. Right now, that minus 3,000 probably looks like more like plus 2,000, right? Because my members go like, why are you getting out? I'm like, look, man, my history is that when I do something and you go into an immediate hole, it doesn't feel right, obviously. But then I did it at a point that I thought it was going to stop, and it didn't. I did it at the 50 EMA at $10, and stock hit 7 and change on Friday. And I'm going like, okay, you give me a break even, or give me lunch money, I'm out of there. And that's what I do. That's what I got to do, because I trade my equity. I don't look at anything else, honestly. Each position do their thing. Do I want all of them to work out? Of course. But then do they? No. So full transparency on this channel. I will post my open positions today, Monday, Wednesday, and Friday on the community page of the YouTube channel. Go check it out. This is not trading, financial, or investment advice. What I do is very risky. I can handle it mentally, financially, every other way. Maybe your account cannot, so don't follow me. I mean, it's your money. You can do whatever you want with it. All right. So what else is going on? New comments. Are there new comments? I enjoyed it too. Thanks for sharing. I'll follow them. Yeah. That was a good talk about the podcast, All In Podcast. Yeah. That's pretty good. That last one was pretty good. Because of the rich who study these things end up in yes and no. Look, I mean, there is definitely a problem with financial literacy in the country. I mean, we all have to agree to this. Okay. Financial, when it comes to finance, when it comes to money, fiat currency, W-2, paychecks, you're on your own. Okay. Government's not going to save you. Unless you have rich parents, you're on your own. You got to take care of yourself. Now, there are a lot of furus, whatever the heck they are on X. They talk about, I'm writing options and blah, 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 blah. In fact, one of those probably should grab the link and come on. We can debate this. They make option writing or selling premium like no brainer. You can't lose. They always do. I'll make this much. I made that much. So to all of those furus, actually, I'll put out a video. Actually, it's getting good traction now. Is that what it's cut out to be? Selling puts, selling calls. It's not risk-free, folks. I do love selling premium myself, but it ain't risk-free. And they make it sound like, yeah, I make so much money selling puts and calls. Okay, I'll give you 3-4 symbols from last week. ELF, Meta, Duolingo, DoorDash, Celsius. They all dropped 25 to 40%. So your little quick cash grab that you sold the puts on for a couple of bucks, now it's $40. Now you're a bag holder. Now go tell that to someone who just sold those puts following you on X. Where is it? How many times? How many months now? Okay, and then they go like, if I get in trouble, I roll. See, this is the shit they don't tell you on X. You roll where? You're $40, $50 in the money. In order to roll with credits, first of all, you're going to take the realized loss on that 3 to 40. Now you're going to have to roll at least 6 months to 8 months to a year out, potentially, possibly, to roll with credits. Okay. And now, or you get assigned. You take the shares. Well, you take the shares, you're down $50. You close the position, you're just taking realized losses. So all they do is unrealized losses become less unrealized losses because they take the realized losses on the original short puts, and then they kick the can down the road. I'm like, no, it's not risk-free. So stop. These people on X, they're like, I'm going like, am I the dumb one in the room here? I know options more than you forgot about options. So don't make it look like they always go, I collected this much premium. Okay, you got hit with one of those. All those nickels and dimes you collected in front of the bulldozer, all got wiped out with that one single disaster. And then they go, oh, well, I'll just take assignment and I'll sell calls. What? What about opportunity cost? Maybe your account size can't handle these kind of losses. What about the regular folks who have a $3,000, Robinhood account? So, I mean, so don't do these things on X, people. I mean, it's like it irritates the crap out of me. They make it look like, oh, I made this much premium. I made that much premium. Where are your losses, bro? You don't have any losses? You're the only trader without a loss because you're selling puts and calls? I mean, last week's drawdown in the markets. Market went down 3. X is full of blood. People are putting their losses 200,000, 300,000. I'm like, yeah, because you have all these naked puts that are super deep in the money now. Now you're going to hope and pray that the market V-bottoms and comes back and saves your ass like it did in April. So that's what they know. Because on an up grinding market, selling puts is great. Yeah, of course it's great. But use the noggin, folks. You get hit with one of those. I mean, look, okay, let's just talk about Meta. Fantastic Mag 7 company, right? Okay, stock is 750, earnings are coming out. Okay, you go, hi, Ivy. Okay, where do we go? Let's go to 700 puts for 3 days. Earnings are coming out on Wednesday after the close. I'll sell the Friday puts for $3. Super high, juicy premiums. Okay. Next day, stock is 670. Friday's low, 610. You're 90 in the money. Those $3 are $90. What are you going to do? Now, if you like Meta at 700 minus the 3, you take assignment. Now you're down 80 points on the stock. Now you're going to start selling calls for eternity to break even, or you're going to hope that the Meta V-bottoms like it does mostly and then comes back and saves your ass. That is not trading, man. That's hocus pocus bullshit. That's fuzzy math. So all these furus on X, stop saying that selling options is a no-brainer. It's not. It's not. There's tons of risk in selling options. And then poor people, some folks will listen to it. And that's why I'm talking about financial literacy. They go on X, they go on social media. They see these jokers driving Lambos and shit. They don't know they don't have a pot to piss in. And then they go, oh, I'm going to be like that guy. I'm like, do you even know the risk of what you're doing? That's why I'm just going like, look, I'm not negative on these things, but then social media creates more backholders than anything else. Well, that Beyond Meat, 50 cents to $10. You go read the chat boards, they're like, oh, it's going to 100. I'm like, what are you guys talking about? It's a worthless company. It was worthless, and now it's still worthless. I mean, there is millions and millions of, not millions, of thousands of these examples. Quantum computing stocks. Same thing. All the bag holders now go, oh, yeah, it'll be good. I'm like, no, it's not going to be good. You're going to sell calls for eternity now. Maybe, hopefully, you break even on a rally. So all I'm saying is there's no risk-free in this world. And if you're going to follow somebody that tells you directly what it is. You got to know what the risk is getting in, right? If you do something before earnings and the stock drops precipitously, it's 30-40%, which happens quite often. What are you going to do? What's your plan, right? So the problem is, people make things seem a little too simple and too easy. They go like, yeah, selling premium is great. Good luck, So if you're going to listen to somebody, ask them questions. Anyway, so how do we improve financial literacy? Well, we make sure we talk about it. Number one, we keep it as simple as possible. Keep it simple, stupid, so the youth doesn't get bored because their attention span is like TikTok, 30-second snippets. So we just try to Keep it as legit and as simple as possible. And, teach them about the basics, teach them about dollar cost averaging, teach them about power of compounding, teach them about rule of 72, and teach them about that it's never too late to start. And, let investing be the new addiction for them. Let that be the conversation at the dinner table or the friends table when they get out, right? But other than that, we all have to do our part, because banks are not going to do it. Banks are just going to send you, when you turn 18, they're going to send you plastic crack after plastic crack. They're going to go spend. And, spending goes with obviously emotional stuff, right? Because you don't feel good. Oh, I want to feel good about myself today. I want to go buy myself something. Well, make sure you pay that in 30 days when you float the bank's money, right? I mean, if you don't pay 30 days, that thing is going to cost you. And then the new thing that we're proposing now, the 50-year mortgage. Are we fucking kidding here? Are we seriously kidding here now? That's how we're going to make things more affordable? Yeah, on a 50-year mortgage, the payments are going to be less on a house that you cannot afford to start with anyway. 50-year mortgage? You do realize your interest cost doubles in those 20 years, right? So on a 30-year mortgage, the first probably 17, 18 years, you're paying very, very, very little principal. And then it kicks in. On a 50-year mortgage, is probably like the first 38 years, you're just paying interest, making the bank rich because the payments are less. That's like the same thing is happening with car loans, right? We never had 72-month car loans. We always had like 3-year car loans. Now we're up to 72-month car loans because car prices have gone up. We have to extend the duration, but we'll collect more interest. The banks are always going to be the winner in this, right? So I think 50-year mortgage is a fucking horrible idea. Seriously. Because you're buying something that you cannot afford to start with. What I would do is I go, okay, can you buy a house with a 15-year mortgage? If you can, great, because you're going to pay that thing off and gone with it. Because you must understand something. Owning a home is not what people think it is, by the way. Yeah, you need a roof over your head, but I've been in the same house for 22 years. It has doubled plus in value. And then I look at it and I go yeah, I have all this equity in here now, but is that worth anything? Okay, so it has doubled. It's gone up 110%, maybe 120% in the last 22 years. Okay, let's take 110% divided by 22. It's 5%. Well, that's this pace of inflation in this country. I mean, it's not look, I'd rather have that protection than not have the protection. I get it. But today, I could not afford my own house. I can't pay $1.8 million for a house and have a $10,000 mortgage and all that stuff and property tax of $20,000, $5,000 a year. I can't. So that's where we are. But financial literacy is key, man. We need to teach these kids, and some kids are interested, right? So when they do come to you, when your kids come to you or your grandkids or your cousins or whatever, they come to you, they ask you, don't just shine them off. Sit there and explain to them because they have an interest. You have them right there for those maybe 5 minutes, 10 minutes, because they're going to go back to PS4 or whatever. But you have them there for 10 minutes. They have an interest. So, that's why I created the website. Go to the website, just click subscribe to the newsletter. There are already a bunch of articles on the blog. Start reading, start educating yourself, because that's the only way. And it's look today. And if you're not doing that today, forget the website, forget this, forget that. You have all the AI stuff, right? You have Grok, you have Gemini, you have this, you have that. I still think humans are worth something, but you can do all of this. Just it's on your fingertips. But you have to have an interest in it. If you don't have an interest, you have to start there. And if your interest is buying an Apple every 3 years on payments and buying an 80-inch TV to watch the Super Bowl, you're behind the 8 ball, sir or ma'am. I think selling options are when you're doing the stock you want to own. Yeah, okay. Okay, sounds good. I gave you all those examples: Duolingo, DoorDash, Elf Beauty, Meta. Stock was 750 before the earnings. Okay, great. If you have the bankroll to do it, go for it. But you know most people don't do it. You know most people are gambling. You know most people are doing it. On that reason, I agree completely with selling options. But then you're going to suffer. Okay, let's look at Meta. Okay, you like Meta at 680. Okay, and you went and sold the puts at 680. Great. Stock is 750. So 10% less, 10% sell off. Oh, okay, cool. Well, now stock is 620. And you're going to take assignment, or you're going to roll your options. You know, most people don't do that. Most people don't do that. Most people sell options because when you sell it, especially if you're with a broker like Thinkorswim or Tasty, unless you do it in a cash account, that means you have to put up the cash as a requirement, as cash secure put. Most people don't do that. Most people are gambling with these things. Most people are trading income on a small size account, and they get blown out with a couple of these things. So, but they do make it sound like it's risk free. But I do agree with that, yeah. So if you like Meta at 680 and you sold the weekly, let's say 680 puts or monthly, 30 days out, well, stock is 620, but you're going to get assigned. Okay, cool. That's fine. But do understand that I could have liked Lululemon. I could have liked UPS. I could have liked Nike. I could have liked all these major, massive names. Look where they are. They're in a 3-4 year bear market of their own. UPS was $280 a share. Okay, I like it at 200. UPS is 60 or 75. So look, all I'm saying is there is this thing on the internet that is selling options, selling premium is free money. You're full of shit. It's not free money. And then selling calls, the same thing, by the way. Picking up pennies in front of the bulldozer, right? And then they go like, oh, no, I get stuck, but now I go sell calls. Okay. It's going to take ages for you to just get back to even. You have opportunity loss, obviously, cost, right? Well, nobody figures that part out. But let's forget that part. And then they go like, yeah, now I sell calls. I do wheel it. I'm like, bro, wheeling has been proven to be garbage. Statistically, it is. Go figure it out. Selling calls. Okay. I saw calls on Palantir. Okay. I saw calls on NVIDIA. Okay. I saw calls on, I don't know, all these, stocks that have been in uptrends, wonderful uptrends for years, right? Couple, 3 years. Now what? Buy back with a loss and sell the next strike. And then within a month, that next strike is already, stock is above the next strike. Buy it back. Just hold the damn stock, bro. No? Because you're trying to create that 3% a month income on the calls, and then you just can't hold the stock. Just hold the damn stock. So anyway, but look, I am not against selling premium. I'm all for it. But understand the risks, that there are risks involved by selling premium. And these furus on X don't seem like there's any risk. There's no risk. Oh, look at this premium I collected. Look at that premium I collected. Well, what about the fucking buyback now that you have to buy back because you're 60 in the money? Okay, so it's not risk-free. That's all I'm trying to say. At all. It's not risk-free. Selling options is not risk-free. Anyway, so let's go take a look one more time to the positions where we are. Oh, maybe we can look at a couple of charts. I got like 7 minutes. Okay. Where are we? Everything's holding the way it should. Okay. It's all good. About the same. So let's look at some charts. This is the S&P 500. Let's go to big charts. This is the 1 year, 1 day. We came, tested the 50-day. People were like, oh my God, market's dying. I'm like, what are you guys talking about, man? Market's down like literally from peak to trough on to Friday's low. I don't even think market went down 5%. And people were like, oh my God, my account's getting crushed. I'm like, yeah, because you're in 5 beta stocks. I can put some of those up. This is the S&P 500. We're bouncing back, obviously. Put in a key reversal day on Friday, gapped up today, small gap. I mean, look, I don't make fun of technicals, but it is what it is. We'll retest the high probably. Same thing is happening on triple Q. Bond vigilantes are not buying a word the Fed is selling. Since they cut the rates, the Fed funds rate, bond rates, especially in the 10 and 20 year, have done nothing but go up. So when the president keeps saying we need lower interest rates, Fed can only work on the short end of the curve. Long end of the curve is going to do what it wants to do because nobody can control that. So there you go. Actually, rates have gone up about 35 basis points. This is Apple, pretty close to an all-time high. Amazon. The circle jerk continues. I have a rant video coming out at noon today. Do you guys trust Sam Altman? I don't trust him as far as I can throw him. So, yeah. Anyway, so that's Amazon. Google is probably the best one. I own Google in my investment account. Yep, new all-time high, almost. Yeah, here's your meta. Okay, yeah, okay. Cash secure puts, short puts. Great. Literally, stock was 760 before the earnings, and then actually hit 595 on Friday. Okay, short puts. Selling puts are great. You liked it at 700? You're going to own it. Good luck. It's the 633. Again, I'm not saying it's bad, but then you have wishes like this, right? Are you going to be able to withhold that, right? Last time in April, stock meta went from 740 to 480. That's 250 points, folks. Or you can sell puts. If you've been selling puts on UPS, let's say, you're going to own a lot of shares that you don't even want. This is UPS going back to a year. This is UPS going back to 3 years. I mean, yeah, 200 down 10. This is UPS going back 10 years. UPS topped at 235 October of 2022. Stock hit 75. Okay, sell puts. I like UPS. Okay, cool. And sell calls now. You know how many cycles of calls you need to sell on this thing now? So don't give me this, selling puts and income generating bullshit. Come on now. Let's get real. Here's CELH bouncing today a little bit. There you go. How do you deal with that? Stock closed at 60 and yesterday on Friday hit 40. And on a stock like this, the premiums are not going to be that high. Oh, you like Celsius? Okay, you own it then. Okay, here's Duolingo. Talk about selling puts. There you go. You like that one? 544 high, hit 190 on Friday. Or even before the earnings, 260, 270 to 180. How do you deal with that? I don't know. Maybe you guys have a better stomach than I do. Because if I get hit with one of those, your year is pretty much done. So anyway, okay, so let's go through, actually, this is ASST. This is where I have the long 500 leaps on. There's a lot of stuff going on the internet, especially on X, that some major folks are buying this. I'm like, look, man, price tells me what it's going to do. It looks okay. We'll see. It was beyond meat. Okay. What about it? Yeah, I'm like, anyway. I don't want to argue with people when they go like, oh, this is what this is going to do. Open actually is trying to break out of this wedge. I don't draw lines on my charts that much, but there's a legitimate wedge going on here. So we'll see what happens next 4 days. I'm long some calls. Other stocks like NVTS I was trading. I actually wanted to trade Archer. They did a secondary at under... Yeah, I don't know where, but I will trade the 2x ETF for this one. I love Lemonade. Great stock. Earnings were great. Pull back to breakout, and right back to old high. Here's Carvana. How is this fucking thing at $320? I have no idea. Earnings did come out. Gap down, sold off, bouncing back. This is the time to short if you're going to short Carvana. I mean, I preferably short the shares, honestly. It does have a 2x ETF. I don't think it has an inverse ETF, though. Yeah, this is Carvana 2x ETF long. Yeah, can't short that probably. Just go with synthetic short. I don't know. I'll figure something out. So Carvana. If you guys have any questions, just post it. I'll look at the chart. This is FTHM 127 hit 105. I didn't even know. I would have bought some more at 105. There was a big ass block at like on the bottom there. So we're putting kind of a reversal day in. Tomorrow is the earnings on that. Hopefully we don't get hit with sideways, but I'm looking for 2.5 on this. I like Resolve AI. Is that bouncing today? No, it's not bouncing. Yeah, I do like this one quite a bit. I like the chart. I like Path, UI Path. Yeah, on a 200 EMA. Oscar, the deal was not done or didn't include the ACA credit, so Oscar's selling off. 1496. I do like Oscar, about 12 and a half, maybe 13 range. You know, there's a huge following on the stock too. Like YOLOers are all in there. They're all crying probably. What else I like? So I have 4 stocks on my. Actually, I'm going to buy UPS probably this week. I have Kava. That got smashed. I'm down about probably 12 points on that stock. I had sold cash secured puts, and then look what happened. I got, yeah, you know, there you go. So, but I do like the company longer term. It's in my long-term portfolio. I got Google. I got Kava. I got Lulu in my long term. I had Nike. I made money, got out, and I'm just about even. Yeah, maybe up a couple of points on Lulu. Replaced it for that. I'm going to go into UPS. That'll be my 4th stock. I was long Unity Software. I took the double, although I don't like trading short term in my long term account. I paid about 20 and 21 and a half for this, and it got to 47. I go like, okay. I got out with a double. I got to pay short-term capital gains taxes on that. I don't like doing it. So I'm Google, Kava, Lulu, and I'm gonna get into UPS at some point here. I mean, I showed you guys the 10-year chart. UPS is like selling. I mean, I don't know, you know, FedEx is doing a lot better than UPS, by the way. So same business, right? It goes to show about management. That's FedEx. Okay. Look at the 3-year FedEx chart. That's almost kind of ass too, but it's definitely better than UPS. I mean, look, people are still going to need to get shit delivered. That's UPS. Look at UPS. 70, 60% off. UPS is selling. This is 10-year. Literally, UPS is selling where it was selling. No joke. When it was selling in 2015, same price. So if you hold UPS from 2015 all the way to today, you're breaking even. So, yeah, stocks are to be bought and sold, but you know, who am I to say anything about that? Yeah, I think I'll buy some UPS in the long-term investment account, or at least sell some puts. Actually, it did gap up. That's the first sign that you got to look for. So earnings were there, gapped up, high volume, pulling back to break out. Now, if you're going to get into UPS, this is the time. Yes, you did not pay the low. You did not pay 85, but you're going to pay 90, 92 maybe. But then now you know it's on its way. It has a dividend coming up as well. $1.64 dividend. So figure that out, folks. $1.60. I mean, is this safe dividend? I'm pretty sure it is. So $1.64 times 4. That's about $6.50. Actually, I like that more now. $6.50 on $92. What is that? That's like 6%, 7%, 7% dividend while you're holding. I like it. Actually, I'm going to go buy some. Yeah, I'm going to go buy some UPS at 92.5. I do like it quite a bit. And then I'll sell some puts at the same time. So if I want to buy UPS under 990, I will. Because the gap up was the earnings. Last gap down was the earnings. This gap up is the earnings. I think we're bottoming here somewhere. I mean, look, we're selling at 2015 prices. Take out inflation. UPS is selling for nothing, basically. So yeah, that's where we're playing. A couple of the Chinese names I really like. Baidu I like quite a bit. Is it up to date? Yeah, it's up. I like that chart quite a bit. Not just the chart, the company itself. Couple of the Chinese Waymo competitors, which are all over the world. Pony AI. Wow, that's sold off all the way to 13, 12 and a half. They went public in Hong Kong since then. There's some arbitrage probably going on here. And we ride. Oh, wow, $8 again. Yeah, we've been trading this for a long time. And here's BMNR. BMNR is going here. BMNR is going there. BMNR is not going anywhere. If Ethereum, this is Ethereum ETF, okay? If Ethereum is not going, BMNR is not going anywhere. In fact, BMNR is going to go lower because MNAV is getting crushed. I talk about MNAV getting crushed. You guys should understand what that means if you're holding strategy. You know, I rest my case on this one. Here's IBIT. IBIT is Bitcoin ETF, right? iShares, right? Okay, so let's look at the same time zones. Okay, let's look at here. So Bitcoin IBIT is at 51. No, sorry, 60. Last time it was 60. It was middle of December last year. Okay, 60, same exact price. No questions, right? Okay. So let's look at the same date. In fact, let's pick the date. So what date is this? 12/17. Okay. All right. So today we're at the same price. So if you have been holding Bitcoin since 12/17 of last year, you're literally even. Okay. Yes, it gone down, it went up, I get it. But if you're holding it for a year, it's even. Let's see if you are holding MSTR where you are. So we're going to look at the December 17th price on MSTR. Here's December 16, 17, right there. What's the price on MSTR? Let's take halfway. Let's be generous. $423 a share. Okay? Okay, cool. So Bitcoin is the same. MSTR should be the same, right? Right? Because I hold Bitcoin, right? Okay. MSTR today, 240. Close to 50% lower. While Bitcoin is identical to what this price in last December 17th. Why is that? Why is that, folks? Oh, there's something called MNAV that all these knuckleheads on X don't figure out. They go, yeah, it's fantastic. I'm like, no, MSTR is getting crushed because MNAV is getting crushed because Jim Chanos was right. He bought Bitcoin and shorted MSTR, made 50% on his money. That's what the hedge funds are doing. And these people don't understand. This probably the same thing is going to happen to BMNR. Same thing happened to SBAT. Actually, every DAT is selling under 1 MNAV now. I mean, I bought SBAT at 0.85. I thought it was a good deal. It went down to 0.82. So, folks, don't listen to snake oil salesmen. They're not going to tell you the truth. They're going to sell you their book. Okay, there you go. This is the perfect picture of MNAV getting crushed. And then now people go, well, it will never go to 1. Why wouldn't it go to 1? Why wouldn't it go to 0.85? Actually, MSTR came from 0.7 MNAV to 3.2. At 543, when it hit the high, it was 3.2 MNAV. Right here, folks. Right here. So if you paid 3.2, or if you paid 1.8 on BMNR, you're crying now? You shouldn't be crying. Buyer beware. You didn't know what the hell you were buying. Well, now you do. Okay. You know, Wall Street is brutal. Yeah, don't mess with Wall Street. Wall Street knows what they're doing. Anyway, I'm going to go have a cup of coffee. Xpeng. Hey, Lynn. Hey, Lynn. Do some due diligence for me on Fathom Holdings, FTHM. I own 16,000 shares of the stock. They're right in your neck of the woods. They're the largest real estate broker, mortgage broker, and title company in the Carolinas. I think they're based in North Carolina. Fathom Holdings. Do some due diligence. FTHM, yes, sir. Yes, ma'am. Yep, correct. I was looking to add, but earnings are tomorrow. Maybe I'll add once it starts moving higher. I mean, my cost basis is pretty close. Full transparency, my buddy works. He's the managing partner at Roth MKM. They have a rating of buy with a 2.5 target on it. It wasn't exactly because of that I bought it, but I think he's brilliant. So there is potentially double here. So, and if the rates, if mortgage rates go down, housing picks up, maybe the company will do better. They just floated the secondary at $2 a share, so they don't need cash. So I'm giving you everything I know. So full transparency here. That's why I bought 16,000 shares. Okay, cool. Xpeng. What about? Is that the symbol? I don't know. Okay, I'll take a look. Oh, actually, there is one Chinese company that is similar to Archer Aviation and Joby Aviation. It's called Ehang, and I want to show that chart. Xpeng. What's Xpeng? Is that the symbol? Honestly, I don't know, but I'll try to take a look. X. I don't know. Oh, Xpeng. XPNGF. Okay. Okay. 1 year, 1 day. Very liquid. I don't know. Or is there an ADR for this? Maybe there is. Oh, XPEV. Okay. XPEV. Okay. Oh, nice. I liked a year ago. I liked Billy. Yeah, Billy's pulling back into support now. If you're gonna get in, this is the place to get in. They're the YouTube of China, by the way. XPEV. I like this one. This looks nice. Technically, I don't know anything about it. Yeah, we're trying to break out. I'll bet you this was a lot higher. This looks very much like Billy. No, this is nice. Nothing wrong with this one. 10-year back. Actually, this is, yeah, I like this quite a bit. It's coming off a base, exactly what I like. Did come off the base, building this next leg. I do like this quite a bit. Well, thank you for the suggestion. I'll take a look at it deeper. I don't know what they do, but I like it. And this is the one that's Joby Aviation and Archer Aviation proxy, let's say, the Chinese version. It's called Ehang Holdings. They do the, not the drones, but they do the human version of drones, right? EV tolls, basically. I like these types of charts, right? They go sideways. When they start going, they get going. This is 10 years. It was 130. We're down to like 16 and a half. 3-year, still in the trading range. See, if you're going to like wheel a stock, this probably would be a great wheeling stock. Sell the puts, get assigned, sell the calls, get called away, that kind of a thing. Do strangles on stuff like this that's going sideways. It does have its moments. So this is 1 year, 1 day, just going sideways. It's in the support zone about 15, sell zone about 20. When we do breakout, we'll probably go to 30. Yeah, I do like that one as well. So Xpeng is interesting looking chart. Anyhow, folks, all right, I'm gonna go have a cup of coffee and finish my green day. Oscar, I talked about it, but I'll give you the 1 minute. I'm a buyer of the 2X ETF, which is OSCX. And if Oscar gets down to 14, I'll start buying it. Maybe 14, 13 and a half, 14. Disappointment is because to open the government, the deal did not include the ACA credits. There's going to be a vote on it in December, so it's going to be volatile. But just going with price. Like Wall Street is not positive on this company. While it was going to 22, people had $9 targets on this thing. So, a lot of people on X love the company. I'm like, I don't pay attention to any of that. Do your own due diligence. Technically, I'm a buyer at 14 or under. I'll scale it in, and I'll trade the 2X ETF. That's about it on Oscar. Maybe you can sell some puts. If you want to own it, sell some puts. That stock would be a perfect example of owning something or willing to own something and selling cash secure puts. And if you don't get called away, you created some income for yourself. But I am going to buy UPS, by the way, today in my investment account. I'm saying so. That's going to be my fourth stock in my investment account. And I will sell some 90 puts. I like UPS here. I like the dividend too. 7% dividend while we're holding it. Nothing wrong with that. I don't think the dividend is in shaky ground there. XPEV, I looked at it. Oh, are they oh, they're a car company? Okay. I don't know. NIO was doing fine. I don't know where it's at now. Anyway, folks, I'll see you guys on Wednesday. Green hat, red hat. Today we're green hat. I don't think I can get the green and the red done. Proper green, proper red with an arrow up and an arrow down. Should I do it, Marky? Give me some ideas. The green hat, what should I say? What should it say? Just an arrow? That's kind of silly, you know? Green up arrow or just a solid green hat? I don't know. Give me some ideas. Maybe by Wednesday, because it won't be done. So you guys think about it by Wednesday. Let me know when I do Trading with Sergio, Wednesday edition. 10 a.m. Pacific, 1 p.m. Eastern. Here's the bookends. Fridays, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Mondays, 10 a.m. Pacific, 1 p.m. Eastern. Let's not forget, 4:30 p.m. Pacific, 7:30 Eastern. Members only live. Love doing those. They're a lot more one-on-one interaction. They're learning a lot faster that way. They have access to me. Also, they have access to my trades live. None of this is trading, financial, or investment advice. What you do is on you. Do your own due diligence. But so they get the live stream every week. They get the replays, obviously. They get my trades live, and they get my positions live at the end of every day for becoming a member. Oh, there you go. It's not a bad idea. But red is already down, like bad morning or something, right? Yeah, maybe just like a graph up and then graph down. Okay, not a bad idea, Doug. Not a bad idea. So yeah, and please support the channel. Subscribe if you're not subscribed. Put a thumbs up. My manager says, YouTube manager says it helps the algo. Go to my website, www.sergioavidian.com. You're in time to receive the latest version of the newsletter, free newsletter. All I'm asking you is for your email. I'm not asking you. I'm not selling you anything. Some of these are Discord, none of that shit. I am on a mission to improve financial literacy. You want to help me with it? Subscribe and share. Because there are already 7-8 articles in the blog of the website that are amazing articles. Start now. Investing now. Education now. And share. You don't, I mean, AI is there, but I'm talking to you, so maybe it's worth a little bit more. But anyway, so you guys have a good week. Traded, and we end every live this way. May all your shorts tank, and may all your longs skyrocket. I will see you guys on Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. Adios.